Well, hello and a very warm welcome to Daily Dispatch by YourStory, a show that gives you all the latest news and updates in the startup ecosystem. I'm Priya Sheth and I will be hosting this show every day, Monday to Friday at 5 p.m. So be sure to log in on time every single day. Rest assured, we have a very strong team of researchers and reporters who are tracking daily updates from the startup ecosystem, and therefore we will have a consolidated list of the latest news of the startup and e-commerce ecosystem for you. Now, first up, let's talk about what the show is about. We'll be having two segments. First of all, we'll be looking at the top developments of the day, that's the movers and shakers in the startup ecosystem. This will be followed by an interview with a very interesting personality every single day. So be sure to be there on time, and I will be there every single day giving you all the latest news and updates. But first up, let's look at the top stories that we're tracking this evening. Well, clearly the talk of the town over the last couple of days has been on WhatsApp's privacy policies. Now, what we do understand is that as concerns around these policies emerge, Zoho is all set to roll out its own messaging app, EBIDTA. Now, this comes at a time when a lot of users have been migrating to apps like Signal as well as Telegram over the last couple of days. The next big news in focus is from the funding space. Global private equity giant KKR has closed its Made in Asia Infrastructure Fund at a whopping $3.9 billion. Now, this fund is likely to invest across Asia Pacific in properties such as waste management, power, utilities, and communication. Well, the next news story is in the online gaming space, clearly a space that has been hot over the last couple of months, especially in this lockdown, where we're seeing a new breed of online gamers who have been emerging, and that's the reason online gaming startup Zupi has raised an additional $10 million. Do remember that this startup has been backed by Matrix Partners, and this is its second round of funding over the last 12 months. Do remember that Zupi had raised $8 million in April 2020. The funds will be used for expansion into new markets as well as building scale. Well, the next funding announcement is from the electric vehicle space. Electric vehicle maker Simple Energy has raised an undisclosed amount from angel investors. Do remember that the electric vehicle space is seeing far many takers in India, and this startup is confident of raising another $10 million by the second quarter of this year. Now, do remember that this startup will be launching its scooter Mark II in May 2021. Well, the last headline from the day is from the EdTech space, because Mumbai-based EdTech player Upgrad has registered 100% growth since March 2020. Do remember that there have been many lockdown learners that have been coming into the fold, and Upgrad has hit a milestone of 1 million learners by December 2020. Now, this portal has also announced ESOPs, which means that it will be giving 600 out of its 2,500 employees ESOPs owing to the stellar performance that it has seen over the last couple of months.
Welcome to our second segment of Daily Dispatch. Now with us, we have a very special guest joining us. It's Mr. Bikram Bedi from Grofers. Many thanks for joining us today, and it's always a pleasure speaking with you. The last couple of months have been phenomenal for Grofers. Amid the pandemic, e-commerce companies have disrupted and pivoted, and many of them have even diversified in terms of their overall models. So for Grofers, I understand it has been an interesting journey. Tell us about it.
It has been an interesting journey. 12 months ago, if somebody had told us this is how the next 12 months are going to pan out, I doubt too many people would have believed them, whether it was about the pandemic or it was about business growth. But yes, here we are 12 months down the line. We're starting 2021, and it's been a very, very I can say interesting and different 2020. For Grofers as a journey, I want to talk about three specific areas. The first is the opportunity that this pandemic gave Grofers to essentially serve our customers and the country. Now, when I talk about March, I think it was 23rd when the lockdown happened. Our first goal was, how do we ensure delivery of essentials safely to our customers? because at that point you would remember there was huge amount of disruptions. Operations were disrupted, supply chains weren't working, and our first thought was, how do we ensure delivery of essentials safely to our customers? So we focused on essentials, which was rice, dal, atta. We kind of shrunk our assortment because we said this is what we need to focus on, because this is what customers need: detergent, soap, things like that. And we focused on getting those out to our customers safely. Now that also meant a huge change in standard operating procedures from what we hadn't done before. So for example, at warehouses, sanitization, washing of crates after every use, infrared thermometer checks for people who are coming in, for our delivery boys, gloves, masks. Our COVID related expenses went up significantly because we were spending so much money to ensure the safety aspect of delivering to our customers. So we hired about 4,000 people during that time. So that was a very, very interesting phase of that journey that gave us the ability to serve our customers. Over the next couple of months, then we spent time, as things settled, we spent time on innovation. We said, how can we service our customers better? We had got past the initial hump where, people were struggling to get goods. Now supplies were more normal. We said, how can we change for this new world? How can we build innovation? So that was the second part of the journey. And there it was, building new, using tech to build new innovation. So for example, we built a new innovation called Edit Cart. Now what Edit Cart allows you to do is that after you have placed your order and between the time that we deliver it to you, if you remember something, you can quickly add it into your cart. Now, this is critical because during that time, you would remember people didn't want multiple delivery boys coming to their house again and again. You wanted to interact with only one person who could get you all your goods. And very few, grocery vendors or otherwise even e-commerce vendors allow this. So that's something we thought was top priority for our customers, and hence we worked on that and got that ready. The delivery boys who were out there during the pandemic were facing various hardships and dangers. And we introduced a tips feature so that they, got motivated. It was called, tips for our delivery heroes. We introduced limits to stop hoarding because people were, buying 20 kg, 30 kg, 40 kg of atta together, and atta was scarce. Rice was scarce, dals were scarce. So we started putting limits to stop hoarding. If you were a customer, you could buy repeatedly, but you couldn't in one order hoard. Then there was a lot of, we built a feature which was around the phone and WhatsApp, which would allow customers to place orders on that. And more than us, what we did was we, worked with local authorities in various states, and we gave it to them so that they could run helplines where people could place orders. So a lot of innovation happened there. And then, of course, is the third part of the story, which is the business metrics. If you look at the business metrics, because of the pandemic and people, the baselines shifted for e-commerce, especially e-groceries, and hence we are seeing significant bump ups. We are seeing, the number of orders is up by 60%. Our average cart size used to be about 13 to 1400 rupees. That's now around 1800 rupees. During the festival, it actually went to about 2000 rupees. And, most importantly, we are now profitable on every transaction that we do. On every order that we do, we are profitable. Our goal is to get EBIDTA positive in the next 6 to 8 months, so that we can push for the IPO that we've announced, that we are going to be going for an IPO in either 2021 or 2022.
At the end of FY20, I understand GMVs were at the range of about $1 billion. At this point in time, what are the GMVs looking like?
So, like I said, the GMVs at this point, I can come back to you with the exact number because it changes month to date. And the last, PR approved figure that we had was close to about 700 to 800 billion. That was a couple of months ago. So I can ask PR to come back to you with the exact numbers. But yes, significant bump up in GMV. Like I said, because the AOVs have moved up and the number of orders earlier pre-COVID, we were looking at about 17 lakh orders in a month. We're now doing close to about 25 plus lakh orders a month. So with that and the bump up in the AOVs, we have seen a significant jump up as far as GMV and revenues are concerned. Ballpark, I think we're talking about 60 to 80% bump up in GMVs.
So when you talk about a 60 to 80% bump up in GMV over the next 6 to 8 months, is there a timeline that you're working with for maybe a $2 billion or a $3 billion kind of GMV roadmap?
So what has COVID taught us? COVID has taught us, and we must have seen this across various verticals and various kinds of businesses, that unit economics is very important to run your business. So yes, growth is important, scale is important, but I think what is also important is running a consistently profitable business. So while we are focused on growth, we are more focused on unit economics at this point in time. It's more about the fact that we first wanted to, our goal was that we wanted to get positive on every order by December 2020. Now we kind of, achieved that goal about 6 months before. So in July of 2020, we achieved that goal. Now our goal is to get to EBITDA positive. That's really the goalpost that we're chasing. The growth is coming. So we are not really thinking about this should be a 2 billion or a 3 billion GMV business. We're thinking about this needs to be an EBITDA positive business with the growth that's coming. We're seeing very healthy growth. I mean, 60 to 80% growth is very healthy growth, right? So the focus really is about EBITDA positive. And while we do that, how do we ensure that we are consistent as far as our customers are concerned? So clear focus area is get consistent with customers, and consistency would be around, we are an EDLP player, everyday low prices. So be consistent about that. Be consistent about your assortment, and be consistent about your service. Now, if you can get this consistency layer in place with your customers, and you can get an EBITDA positive business, that is really what you should be achieving.
You spoke about getting EBITDA positive. So what are the levers that you're now putting in place to achieve that kind of target? Because I understand that Grofers is also increasing the high margin businesses within its fold.
The first is, of course, we are focusing on supply chain costs. We've always led, innovation as far as the grocery space is concerned. We were one of the first, companies to have bikers start deliveries, etc. So there's a clear focus on how do we bring down supply chain costs without compromising on customer experience, right? So that is one critical area of focus. In fact, if you look at our supply chain metrics, while costs are consistently coming down, our customer metrics like customer complaints, etc., have improved by 70% over the last 5 to 6 months, right? So number one, there's a huge focus on bringing costs down and bringing them down with innovation and tech. A good example I can talk about is we've developed a new concept called warehouse and warehouse, where how we pick, how we, the efficiency that you get or the order per person that you get, the efficiencies on that has gone up significantly, right? So there's a lot of focus on bringing down costs. At the same point in time, we are increasing our assortment. And when we are increasing our assortment, we are basically looking at, categories and SKUs that customers would need over and above the kitchen. So traditionally, Grofers has been about the kitchen. So if you look at, the kitchen, that is all about staples. It's about, rice, dal, atta. But if you look at the other rooms, when people walk into supermarkets, they're buying blankets, they're buying, inner wear, they're buying winter wear, they're buying kids wear. So we are looking at introducing all of these now. So we are widening the assortment. We've already introduced women's ethnic wear. During the festival season, we had introduced a number of categories. We're looking at introducing, grinders, kitchen mixers, things like that. So things that are associated with different rooms of the house. So our thought process is how do we grow the assortment? And as a part of this growth in assortment, yes, some of these things, they come with higher margins, which obviously helps the business. So clear focus. I mean, how do you get to EBITDA positive? You take up your revenues and you reduce your costs. So that's the focus.
So Grofers has had about 12 rounds of funding so far. Lots of money has been raised. And there's a recent round of funding that you all closed as well. So what are the plans in terms of funding? Is there expected to be another round of funding before you go public? Is that the process?
Okay, so I wouldn't want to talk about will there be another round, have we closed a round? The way I look at this is that we, from a runway perspective, we have enough money in the bank. Even before the lockdown happened, we had started focusing on unit economics. And hence, while the pressures of the lockdown were what they were, we were conservative with our spends. And hence, we have emerged out of this much stronger. as a company. So there is enough money in the bank for day-to-day BAU operations. We've already broken even from a transaction perspective. Our view on funding and further money from our investors is all about new initiatives. So we are consistently in touch with them. We are working with them. We are, keeping them updated on what are the new initiatives, what are the growth areas we want to put money into. And if there is an opportunity around that, then they're more than happy to support us. So, I think from a funding perspective, like I said, there's enough money in the bank. We are looking at specific growth initiatives, and we will be putting money behind that.
Talking about the IPO, that's something that the street has been watching out for. What is the plan out there? Is 2021 the targeted year for the IPO, or do you expect it to be pushed into 2022, considering we have a pandemic that we're going through?
Goal is to get it, to hit the capital markets in 21. Having said that, it also has to be about the right time. So this is going to be a phased process. The first phase is to get to EBITDA positive. That is really the first goal, because without that, beyond that, looking at IPOs, etc., will, that would have a significant dependency. So we're looking at EBITDA positive as the first goal. And if we can do that as per our timelines, which is first half of the year, then we're going to try and see if we can hit the markets in 21, otherwise early 22.
All right. I think we're all looking forward to that and the kind of valuation that finally ends up with the IPO process kicking in. With that, Mr. Bedi, many thanks for joining us today. It's always a pleasure speaking to you. Thank you so much for being a part of Daily Dispatch.
With that, it's a wrap on the first episode of Daily Dispatch by YourStory. Thank you so much for logging in and showing us all the love. I'll be here every single day, Monday to Fridays at 5 p.m. with all the latest news and updates from the world of startups. Thank you so much, and do click on the subscribe button below. Goodbye and see you tomorrow.